Hello dear students, today we will see non-profit organization few terminologies. Introduction is over. What is non-profit organization, non-trading, non-commercial, not-for-profit organizations, all are same. Okay, so introduction, you got an understanding. Now we will see accounting treatment. Before accounting treatment, let me remind you 3 stages of accounting preparation. One is receipts and payment account, income and expenditure account, and balance sheet. Just like final accounts, 3 stages. Now how do we treat each and every item, that we'll see now. So here first one I am taking here subscriptions. Subscriptions means people who are members in the organization, they'll be subscribing some amount to the organization. So that's called as subscriptions. First know the meaning, then treatment also we'll see. So this is the meaning of subscription. So how do we treat it? So this would appear always income and expenditure account credit side. Subscription, someone is subscribing, it's an income. Income will appear in the income and expenditure account credit side. Okay. Next one, donations. They get income through the donations. These non-profit organizations. This is donations. Donations, how do we handle it? Donations are 2 types. General donations, specific donations. General donations means I have given suppose a 20,000 donation, that is general donation. Donation for specific purpose, donation to improve the hostel, donation to give the medicines, donation to purchase the equipments, means this is specific. If any specific donations are there, that is second one. General donations, specific donations. General donations treatment will be 2 types. Large amount, if the amount is large, then it will appear in the balance sheet liability. Revenue income we call it, capital income. So that is why we say large amount will be in the balance sheet liability. If donation is small amount, receiving donation, income and expenditure account credit side. Income and expenditure credit side means incomes will write. So income and expenditure credit side, small amount. Large amount is balance sheet liability. So this is general donation. And specific donation, always specific donation, balance sheet liability. Balance sheet liability, remember. So donations are over. Next one, legacy. What is this legacy? Legacy means nothing but will. Still confused? Will? Will means suppose say a rich man who's having a lot of property. In the will means after my life. So the property to whom I wanted to transfer, that is called as will. So to whom he wanted to give in a will means through a court paper he'll be writing how it has to be distributed. In the will, if he is writing say 5 crores will be donated to so and so non-profit organization, then that is will. Will is a income for the every non-profit organization. So will, that is legacy. Legacy we call in terminology, accounting terminology, legacy means will only. So this will be always balance sheet liability. Any huge amount, remember blindly balance sheet liability. Okay, so legacy is also only one time we get, non-recurring item. So this will be balance sheet liability. Next, entrance fee. Entrance fee means generally it will be recurring entrance fee, every time we will be getting entrance fee. So that entrance fee for taking entry into the organization, entrance fee, some fee they will be collecting. So this fee, income and expenditure account credit side will write. Income and expenditure account credit side means income only. Next one, life membership fee. Life membership fee means one time amount only. Life membership fee they collect only one time. Only one time. So that is why this comes in the balance sheet liability. Life membership fee, balance sheet liability. If it is recurring in nature, then we would have taken into the income and expenditure account credit side. Not recurring, non-recurring. So balance sheet liability. Next one, sale of old assets. Any old assets are there, machinery, furniture, building, old assets, that we are selling it. When we are selling, treatment will be, when you sell that amount balance sheet deduct from the asset. Say furniture is there, that I have sold it. Sold out means balance sheet, from furniture you have to deduct. Where will be the furniture? Balance sheet asset side. Deduct from the assets, because sold, assets are decreasing, so that is why we will be deducting from the asset. This is one way or one step. Second step would be, when you are selling, you will be getting profit or loss. Whatever you get, that profit or loss, this we have to take it into the income and expenditure account. Sale of assets, sold assets, two steps. First one is that when you are selling, asset value is decreasing, so deduct from the balance sheet asset side. Second one is that when you are selling, you may be getting profit or loss. That profit or loss will be in the income and expenditure account. If you get a profit, credit side of income and expenditure account. If you get a loss, debit side of income and expenditure account. Say 10,000 asset cost is there. I have sold it for 8,000, means 2,000 is loss. Loss will appear in the income and expenditure account, debit side. Another example, 10,000 is the cost of the asset. Sold it for 15,000, means 5,000 profit. 5,000 profit would appear in the income and expenditure account, credit side. So this is about the sale of assets, old assets. Next one, sale of old newspapers and magazines. Sale of old newspapers, magazines. This is recurring nature. Every time it will be accumulating. You have to sell this old paper and also magazines. So this is recurring nature. So that is why income and expenditure account, credit side will write. Income and expenditure, credit side will enter it. It's income. So incomes will be in the income and expenditure and credit side. Next one, honorarium. Honorarium means generally if someone gives a lecture, someone gives any consultant, someone gives their valuable services, for them will be paying some fee. That fee in non-profit organizations they call it as honorarium. H silent. Honorarium. So this will be in the income and expenditure account, debit side, because expenses this is. We are paying some amount to the other person. It's an expenses. So income and expenditure account, debit side will write. Next, we'll see some more. Grants from government. As I told you in the introduction class, all the non-profit organization main source is that grants from the government, central government or state government. When they get grants, what would be the treatment? Grants are two types. One is specific purpose or general purpose. If it is a specific purpose, especially for any particular purpose, that would be treated as balance sheet liability. Any specific purpose. General purpose, generally some amount, some donation is given, some grant is given by the government, then that would be income and expenditure account, credit side. Are you getting it? In the same way, next, revenue expenses. Revenue expenses means recurring expenses. Revenue expenses, example you can take like transportation fee, purchasing or anything, or advertisement, auditor fee. So general expenses. So these are all revenue expenses. Revenue expenses will appear always in the income and expenditure account, debit side. Blindly you can remember one thing. Recurring expenses, recurring items will be in the income and expenditure account. Non-recurring, only one time it goes to the balance sheet. Are you able to remember? Okay. Next, so revenue expenses, income and expenditure account, debit side. Expenses, debit. Revenue receipts, revenue means recurring. Recurring will be income and expenditure account, right? So revenue receipts, all the receipts will be in the income and expenditure account, debit side. So income and expenditure account, credit side. Expenses debit, incomes credit. Okay. Next, capital expenses. Capital expenses means expenses related to capital items. Non-recurring, this is. Non-recurring will be in the balance sheet. So balance sheet asset. Balance sheet asset. Next one, purchase of consumable items. Purchase of consumable items. So this kind of purchase, consumable means recurring only. Purchasing, recurring consumable items. So those items income and expenditure account. Any item recurring will be income and expenditure. Purchase means expenses. So debit side of income and expenditure account will write. Simple. These are the main treatments. If you know it, accounts preparation is damn easy. Just take a screenshot. If you know final accounts, trading account, profit and loss account and balance sheet. If you know final accounts, non-profit organizations are simple. Only you must know this main terminology, what accounts we are preparing. It has to be in the mind: receipts and payment account, income and expenditure account, balance sheet, and terminologies. If you understand, quite easy. We'll work out the problems from the next class onwards. I've already covered the basic chapters and also some more subjects also already covered. If you are doing CA, CS, CMA, even engineering students, everyone, I have prepared lot more subjects. Check it out in the description box or go to the playlist and just find out the links. So it would be easy for you to search subject wise links. Need not to search for one topic. If you find the subject link, you'll get all the topics. Go ahead, learn and improve your skills, and also don't forget to share these videos. Stay blessed. Good luck.